Welcome back to the Malaysia Money Matters show. It's the 30th, April 25. We're diving straight into what's shaping your financial landscape here in Malaysia and, well, across the globe too.
Indeed. Lots to cover today. Quite a bit happening.
Definitely. Let's get right to it with the latest from Malaysian companies. First up, Aizo Group.
Oh, yes, formerly Mindtech Resources.
Exactly. They've just formalized a power purchase agreement with Niaga National. It's for a pretty significant solar project in Kampar.
How significant are we talking?
Almost 100 MWs.
Yeah.
So yeah, substantial. Their subsidiary, Wallasan Demi, is handling the whole thing.
Right, so big move into clean energy for them.
It looks like it, though their stock did dip slightly. What's the takeaway here?
Well, it's a concrete step, isn't it? Towards Malaysia's renewable targets. A project this size shows real commitment. The share price dip. Could be initial costs, maybe market jitters, But long term, this could really position Aizo well in the clean energy space. Good for their growth, good for Malaysia's energy mix.
Okay, moving on to Bursa Malaysia itself. Their stock hit a 3-week low.
Oof, yeah, I saw that. And analysts are lowering forecasts.
They are. Seems the first quarter was weaker than expected. Net profit was only, about 23% of the full year estimate?
That's quite a miss. Any reason cited?
Low trading volumes, maybe linked to tariff worries. CIMB Securities thinks Q2 might see a further dip too.
Right, post-U.S. tariff announcements, market sentiment could be cautious. Makes sense.
Yeah. But Bursa is, interestingly, sticking to its targets for the year, including IPOs.
So a bit of a disconnect there between market sentiment and their own outlook.
Seems like it. What does that signal about the broader market?
Well, it definitely flags a question about investor confidence, right? The low volumes, the revised forecasts, it suggests the market is reacting to those global uncertainties, especially trade. So even if Bursa is optimistic publicly, these signs point to a potentially cautious short-term view for Malaysian stocks.
Got it. Okay, let's switch gears. Some positive news from CIMB Group's Indonesian unit, CIMB Niaga.
Ah, yes. Doing well over there.
Seems so. A nice 7.37% increase in net profit for Q1, driven by higher interest income, and their asset quality improved to lower NPLs.
Good for them. Any dividend news?
No interim one proposed for Q1, but they did announce a significant one for FY 2024 previously.
Right.
It's interesting, isn't it? Seeing strong performance overseas while the local bourse faces some headwinds.
It really highlights the value of diversification, geographic diversification.
Yeah.
CIMB Niaga's strength in Indonesia can cushion potential softness back home, shows their regional strategy is working.
Makes sense. Now, commodities, specifically crude palm oil. Kenanga Investment Bank has a forecast.
Okay, what are they seeing for CPO?
They're projecting an average of RM 4,200 per ton in 2025.
4,200, even with prices easing a bit from last year.
Yeah, even though prices ease from the highs of Q4 2024, and that premium over soybean oil has disappeared.
So what's keeping prices firm, in their view?
They believe a supply deficit will persist.
Yeah.
That's the key driver. Biodiesel demand in the U.S. has shrunk a bit, but restocking is happening.
Right, so fundamentals static supportive, supply and demand.
That's Kenanga's take. They're keeping an overweight call on the plantation sector. They see it as defensive, consistent food demand, strong balance sheets.
Okay, that tracks. Plantation stocks often are seen as defensive plays.
Next up, Catcha Digital. They're proposing a rights issue.
A rights issue? What are the terms?
It's a 1-for-4 offer, aiming to raise funds for acquiring several digital-focused companies, also for working capital, maybe future deals.
And the price?
Indicative price is 28 cents per share. Plus, shareholders get free detachable warrants.
So basically, they want capital to go on a bit of a digital shopping spree.
That's the impression. Grow their digital footprint, diversify revenue. Their shares saw a small bump.
It signals ambition, definitely. Expanding in the digital economy makes sense. Success depends on picking the right acquisitions, though.
True. Now, a big story from the property sector. Country View.
The Johor developer, what's the news?
A massive 9-fold increase in first quarter net profit. 9-fold.
Wow, what drove that?
Primarily selling commercial land in Iskandar Puteri.
Ah, okay. A significant land sale.
And they declared a hefty interim dividend to 20 sen. They seem really optimistic about the Johor Bahru property market.
Well, with all the buzz around the JSSEZ in Forest City.
Exactly. The Johor Singapore Special Economic Zone, Forest City Special Financial Zone, infrastructure like the RTS link, they see continued growth.
Yeah, that optimism in Johor seems pretty well founded right now. Lots of catalysts.
Let's talk direct selling. DXN Holdings reported steady profit growth.
DXN, okay. How much growth?
up 7.21% in Q4 net profit. They attribute it to cost efficiency and lower marketing spend.
Even with lower revenue.
Yeah, revenue dipped slightly, blamed on unfavorable forex, but profit still grew. They also declared a 1.0 cent dividend.
So managing costs effectively.
Seems so. And they're optimistic about the future, driven by strong international sales and expanding into new markets.
Resilience then. Good cost control, focusing on international growth. Makes sense for their model.
Now for a big one, an IPO. EcoShop Marketing.
Ah, the discount retailer. Launching their IPO.
Yes, Malaysia's largest IPO in 8 months. They're aiming to raise nearly RM 420 million. Retail price is RM 1.21 per share.
420 million, that's quite substantial. Any cornerstone investors?
10 of them secured. Seems like strong backing. They plan to use the funds for expansion, paying down debt, IT investments.
Okay, so a major listing. What does this tell us about the market, you think?
Well, it shows there's still appetite for IPOs, especially for established consumer businesses, right? Particularly in the affordable retail space. And getting 10 cornerstone investors locked in, that signals solid confidence in their model.
Yeah, definitely a positive sign for the capital markets here. Moving to healthcare and sustainability, IHH Healthcare.
What have they been up to?
They've secured their first sustainability-linked loan. That's $300 million from UOB.
Sustainability linked, so tied to ESG targets.
Exactly. Terms are linked to hitting targets like capping carbon growth by 2025, net zero by 2050. It's actually UOB's first such loan to the healthcare sector, too. Interesting. That shows the growing importance of ESG in finance, doesn't it?
It really does.
Companies getting tangible financial incentives to meet green targets. It's a trend we're seeing more and more.
Definitely. And speaking of sustainability, Maxis is expanding its home solar solution.
Right. They piloted that in the Klang Valley.
They did. Positive feedback, apparently, so now they're rolling it out across peninsular Malaysia. It'll be for Maxis and non-Maxis customers by year-end.
Okay. Offering savings on electricity bills, pushing the green agenda. What's in it for Maxis strategically? Well, it's diversification, isn't it? Beyond just telco services, tapping into that growing demand for home renewables. Plus, it boosts their image as a sustainable company. Good branding.
Yeah, makes sense. Now, a slightly concerning one. Mudajaya Group.
Oh, what's happened?
They confirmed their Indian unit, RKM Powergen, was raided by authorities back in early February.
Raided? Over what?
An alleged fraudulent acquisition of a coal block. It dates way back to 2008. Allegations about the canceled allocation and fraudulent transactions.
That sounds complex. How's Mudajaya responding?
They're clarifying that the main Mudajaya entity isn't involved and operations are running smoothly.
Still, it highlights risks with overseas ventures, particularly in sensitive sectors like resources. Investors will want to watch how that investigation unfolds.
Absolutely. Okay, shifting to tech and innovation, MyEAG Services and MyMos.
Ah, the National Research Agency. What are they doing together?
They've launched the Malaysia Blockchain Infrastructure, or MBI.
MBI, a national blockchain platform.
That's the idea, to foster blockchain innovation, integrate digital assets across industries here. It's built on MyEAG's Zedrix platform.
Zedrix. Okay. And the goal is interoperability.
Yeah, cross-chain interoperability, driving digital inclusivity. They say early adopters are already using it.
Wow, that sounds potentially huge.
It does, doesn't it? What's the real potential here?
I mean, it could be transformative for the digital economy in Malaysia. A common infrastructure lowers barriers, right? For businesses, government. It could spur innovation everywhere, from supply chains to finance. Definitely one to watch closely.
Agreed. Let's check in on Nestlé Malaysia. Analysts are seeing softer earnings ahead.
Yeah, I saw some notes on that. Rising input costs, maybe weaker consumer demand.
That seems to be the concern for the rest of FY 2025. Their Q1 net profit did drop significantly.
But CIMB Securities still projects overall growth for the year.
They do, citing recovering domestic demand and strong export potential. But Nestlé might need to look at price adjustments or cost savings.
Standard playbook for FMCG companies facing cost pressures. Navigate rising costs, leverage exports. It'll be about execution.
Right. Pantech Group next. They reported a significant profit drop in Q4.
Pantech, oil and gas sector supplier.
Correct. Softer domestic O&G demand and unfavorable forex hit them.
But they still paid a dividend.
Yes. Declared a fourth interim dividend and a special dividend. Total payout for the year was actually slightly higher than the previous year.
Interesting. So profits down, but dividends up slightly.
They remain cautiously optimistic for FY 2025.
It reflects the O&G cycle, maybe, and the forex impact. But the dividend suggests some financial strengths, or at least commitment to shareholders. Cautious optimism seems appropriate.
Now, a company facing significant challenges for Niaga.
Ah, yes. Still under PN17. What's the latest?
Well, for the third year running, their auditor flagged a material uncertainty about their ability to continue as a going concern.
Third year? Why specifically?
Current liabilities still significantly exceed current assets, and there's a capital deficiency. It's serious.
Even though they have a regularization plan.
Right. The financials are prepared on a going concern basis, but that depends on successfully implementing their PN17 plan, the rights issue, private placement, capital reduction that shareholders approved.
So everything hinges on executing that plan effectively and quickly. That's the critical path.
Absolutely critical. Okay, SP Setia, the property developer, they've set up new sukuk programs.
Islamic bonds. How much?
A sukuk wakala and Islamic commercial paper program combined limit up to RM4 billion for various corporate purposes.
$4 billion. That's significant funding potential. Anything else?
Yes. They also unveiled a sustainability financing framework to support issuing green, social, and sustainability bonds or loans.
So securing funding lines and aligning with ESG trends, strategic moves, access to capital, plus appealing to sustainability-focused investors.
Seems like it. And speaking of funding,
Yeah.
CIMB Property had a successful sukuk sale.
Oh, yeah. How did that go?
Raised RM 800 million. Third sukuk sale, and they got a record low borrowing cost. It was significantly oversubscribed.
Oversubscribed and record low cost. That screams strong market confidence, doesn't it?
It really does. Shows confidence in their financials, their strategy, the Shift 25 plan they mentioned.
It's signed for them, definitely.
Southern Score Builders, their newly acquired unit, SJG Engineering, won a contract.
SJE. What kind of contract?
A RM 51.38 million mechanical and electrical job for a data center project from Gamuda Engineering.
Nice win. First one since the acquisition.
Yep. Gives them healthy earnings visibility. They're bullish on high-tech and healthcare sectors, plus the JSSCZ opportunities.
So the acquisition is already starting to pay off. Good momentum for them in key growth areas.
Seems that way. Finally, for Malaysian companies, Sunway Property and Majestic Gen have broken ground in Johor Bahru.
Another big JB
A
project.
huge one. RM4 billion mixed-use development, strategically located near the CIQ and the future RTS link.
$4 billion. What's planned?
Service apartments, retail outlets, aiming to redefine city center living, complementing Sunway's other Johor projects.
Wow. That really underlines the confidence major players have in JB's long-term prospects, especially with that Singapore connectivity improving.
Absolutely. Okay, let's shift focus internationally. China's pushing the yuan, trying to increase its global usage actively. Seems they're capitalizing on trade tensions, maybe a perceived retreat of the US dollar. Expanding payment networks in Southeast Asia, encouraging cross-border yuan settlement.
It's part of their long-term play, isn't it? Building a more independent financial architecture, increasing the yuan's global role. It won't happen overnight, but these are the steps.
Right. Meanwhile, the European Central Bank is warning about market disorder.
The ECB, what's their specific concern?
Vice President Luis de Guindos cautioned about disorderly financial markets due to trade turmoil, even though the Eurozone banking system is resilient.
So the risk isn't banks failing, but sharp market adjustments.
Exactly. Amplified by non-bank financial institutions. And the risk of trade conflicts hitting households and corporations.
It highlights how interconnected everything is. Trade tensions can easily spill over into wider financial instability, even if banks look okay on the surface.
Yeah. And speaking of trade tensions, the EU slapped tariffs on some Chinese machinery.
Oh, which machines?
The ones used to lift construction workers' mobile elevating work platforms. The European Commission found unfair subsidies and artificially low prices.
So another anti-dumping, anti-subsidy measure against China from the EU.
Seems to be the latest in a series. Part of that broader trend of trade friction, maybe protectionism.
Yeah, these actions can definitely escalate tensions and mess with global supply chains.
HSBC is also sounding a warning note about trade wars.
HSBC, what are they worried about?
Potential negative impact on loan demand and credit quality. Bad news for trade-focused banks like them, even though their Q1 profit was actually better than expected.
So even with good current results, they see clouds on the horizon if a trade war escalates.
Precisely. They've even factored potential revenue hits and higher credit losses into adverse scenarios. Shows how vulnerable the financial sector is to trade disruptions. Let's talk crypto, briefly. MasterCard and stablecoins.
Oh, what's MasterCard doing?
They're going to let merchants receive payments in stablecoins. They cited increasing regulatory clarity globally as a reason.
Wow, MasterCard enabling stablecoin payments for merchants. That's quite a step.
Partnering with payment processors and stablecoin issuers to make it happen.
That's significant for mainstream adoption, isn't it? A major player like MasterCard getting involved signals growing acceptance within traditional finance. Could really push things forward.
Yeah, could be a key moment. Now, Norway's massive sovereign wealth fund.
The oil fund, what's their move?
The CEO indicated a shift in focus, more interest in real estate and renewable assets.
Why the shift?
Stock market volatility, expectations of lower growth, higher inflation. They want to boost U.S. investments, including renewables, and find real estate relatively more attractive than stocks right now.
When a fund that big shift strategy, people notice. It might signal a wider trend among big investors looking for stability, maybe inflation hedges like property and renewables in this uncertain climate.
It makes sense. Let's look at oil prices themselves. They've fallen.
Fallen? Why is that?
Investor concerns about demand growth, mainly due to the U.S.-China trade war. Analysts are lowering demand forecasts, plus expectations of increased supply.
So demand worries plus more supply coming online. Classic recipe for lower prices.
And the market's showing an unusual forward curve, apparently. Tight now, but likely surplus later.
Yeah, that backwardation turning into contango further out.
Yeah.
It reflects that mix of short-term tightness maybe, but longer-term worries about demand and supply overwhelming it.
Okay, U.S. trade data, a record goods trade deficit in March.
Record deficit, how come?
Unexpectedly widened. Companies kept importing goods ahead of tariffs, particularly consumer goods surged.
So pulling imports forward to beat the tariffs.
Looks like it, which means a significant drag on Q1 GDP figures.
Right, because imports subtract from GDP calculation, an immediate negative impact there.
But on a slightly positive note, world stocks and the dollar ticked up a bit.
Why was that?
Relief, apparently, after the U.S. administration indicated a plan to reduce the impact of auto tariffs, eased some of those trade policy concerns.
A little bit of relief then. But the focus is shifting.
Yeah, it seems markets are now looking closely at economic data, company earnings, trying to gauge the actual impact of tariffs, looking for real-world effects.
Right. Less reacting to headlines, more digging into the fundamentals to see how deep the impact really is.
Exactly. Okay, let's wrap up with a couple of points on Malaysian political news impacting the economy. First, the SST expansion.
Ah, the sales and service tax. What's happening?
It's been postponed. Was meant to expand scope from May 1, but gazettement is now rescheduled to June 1st.
Delayed by a month. What's the impact?
Well, BIMB Securities estimates the government misses out on May's revenue from the expansion. But
maybe a short-term boost for consumers.
potentially, a temporary reprieve from price hikes on some things might encourage a little spending. Government just needs to adjust its revenue forecast for May.
Yeah.
And BIB Securities also highlighted another risk: falling oil prices.
More significant than the SST delay, they think.
Yeah, they reckon every U.S. dollar drop in oil price lowers Malaysia's fiscal revenue. It's a bigger direct hit.
But lower oil prices also mean lower fuel subsidy costs, right?
True, it cuts both ways. Lower revenue, but also lower subsidy bills. BIMB has revised down its Brent forecast because of this.
So it really underscores that reliance on oil revenue, doesn't it? And the vulnerability to global price swings. The net impact on the budget depends on how those two factors balance out.
Precisely. So as we wrap up this quite packed overview, what really stands out for me amidst all the trade tension impacts and company moves, the launch of that Malaysia blockchain infrastructure by Niaga and Mimos, that feels like the most potentially transformative news today.
I'd agree with that. It feels forward-looking, doesn't it? While a lot of the news is about navigating current challenges, the MBI is about building foundations for the future digital economy here. The potential to reshape how industries use digital assets to foster innovation. It could really position Malaysia well if it takes off.
Yeah, unlocking new opportunities for businesses, for individuals, definitely has long-term implications.
It's that focus on interoperability, too. That's key for getting wide adoption across different sectors, a foundational piece.
Absolutely. Look, we've covered a lot, but really just scratched the surface on each of these stories. There are always more nuances, more potential impacts.
Definitely. Encourage everyone listening to dig deeper into the news that affects their interests or decisions.
Couldn't agree more. And of course, if you want to stay informed with these kinds of concise, hopefully insightful updates regularly.
You know what to do.
Exactly. Be sure to subscribe to the Malaysia Money Matters podcast. Thanks so much for tuning in. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.